What happens if the real estate market actually crashes? I'm going to share with you exactly what I would do if the market was to crash tomorrow and how I would prepare for what's about to come. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development and financial freedom. Now if you're new here, my name's Ravi and I run one of Australia's fastest growing buyers agencies with almost 40 full-time staff as of recording this right now. And I've also been investing into real estate for the better part of 11 or 12 years. Now as you can imagine, running Australia's largest YouTube real estate channel, you're probably going to get asked every single time in the comment section, Ravi, what happens if the real estate market crashes? So in this video, I'm going to share exactly how I would prepare and what I would be thinking about right now. The first thing I want to cover off is this idea of the mindset. I've definitely heard people say, I'm not going to buy right now because things are good. I'm going to buy when there's blood on the streets. When the market crashes, nobody wants to buy, that's when I will go buy. That's what I've heard. The truth is though, investing is like a muscle. In your body, you need to keep training it. You need to keep those investing muscles active, right? So when times are good and you've got analysis paralysis thinking that the market's going to crash, I don't want to invest, it's going to go lower, what makes you think you're going to have the right mindset to buy when the market is actually crashing? Because you're not going to know how to deal with your emotions. You're not going to know how to deal with it logically because so far, the only reason you're not investing in the last couple of years is because you're listening to the wrong people and the media, which suggests that every second day the market's going to crash. And so if you can't let go of the emotions of listening to all of the fear and instead focused on the data would point you through to say, this has been the greatest time to be buying real estate. In fact, you would have made so much money in the last couple of years if you had just invested well. Now, I'll give you an example of this. In 2018 and 2019, I was talking to a lot of people and they knew at that point I had a bit of a portfolio. So we were chatting about real estate and the response I got from them was, oh look, times are tough given that the Royal Commission's come in, the lending crisis is here. There's so many lending restrictions with buffer rates, interest-only loans and the ratios there. Unfortunately, this means that the real estate market's cooked. It's unaffordable and the prices will go down. This is in 2018 and 2019. Those same people who could buy at that point basically said to me they didn't want to buy. Then in 2020, when things did get tough, we did have a brief period there where prices did stagnate and even go down and negotiating power for buyers was through the roof because people were panic selling. And at that point, those same people were like, no, I'm not buying now. Do you not know there's a pandemic? Prices are going to fall by 30 or 40%. That's what the media is saying as well. Banks are coming out and saying this too. Economists are coming out and saying this too. Ravi, I know you're saying that prices are going to go higher, but I don't believe you, I believe them. So they didn't buy in 2020. What happened in 21 with interest rates being so low, prices went through the roof. All this artificial money came into the system, prices started moving higher for assets, and suddenly they felt like they were missing out. And so before they jumped in, interest rates started going up. And they were like, well, interest rates are going up now, that means we're cooked. Now the real estate market's going to crash. In 2020, they didn't buy. In 21, they didn't buy. In 22, they didn't buy. In 23, they didn't buy. And now we're in 24. And guess what they're saying right now? I'm not going to buy because now prices are so unaffordable because prices have moved up so quickly. Now what I want to do is I'm going to wait for the crash. And when the crash happens, that's when I'm going to buy. And so the question I have for them as well as for yourself, if you've had the same sort of mentality, ask yourself what is going to miraculously change for you to change your behavior. If you think about this logically, you're going to look at data, right? So when you look at the data and you've got a data-driven approach when it comes to property investing, you're going to say, logically, it makes sense because there's not enough supply, there's no incoming supply of new real estate, and we're just about to open up the floodgates. As interest rates cut, people's borrowing capacity goes through the roof. So we're going to have a lot more owner-occupiers jump into the market, buy emotionally because they were out of the market for the last couple of years, thinking, this is my last time ever. That's going to drive prices even further. Yet I want to wait because I believe there's a crash. Now this would line up perfectly with the 18.6 year land cycle. I've made a video about this, you should definitely go check it out here. But the thought is in 2025 or 2026, we should see the market crash when it comes to land cycles. And the one thing I would say is, well, that is also contingent on the Western economies. It's not specifically for Australia. And it's also off by a couple of years, give or take. That's why it's an average. My belief is that we're probably not seeing any sort of crash till probably 2027 at the earliest. Now, I could be completely wrong, but that's not the point here. The point here is what are you doing in order to prepare for a crash? And if there is no crash, how are you going to feel then? And that's the reality that so many have had to face, especially those who have invested or were active in the market in 2006, 2008, 2009 with the GFC, and then post GFC, what the activity has actually been. Now, there's always going to be arguments for those saying prices will never go lower, those that argue that prices will never go higher, and you're going to sit in between. You find yourself in between people who say it's going to go up and some that say it's going to go down. Now, I would go on to argue that I'm in a better position than most average people when it comes to the data and what happens with real estate investing, mostly because we have a full-blown research team at Search Property, we have active buyers agents in markets all across Australia, and we actively speak to a lot of clients. So we're getting the full loop. We're speaking to property managers, we're speaking to sales agents and getting a vibe of what's happening on the ground. We then have the data team that's sitting there just calculating a bunch of things and looking at short-term metrics and long-term metrics, and then coming up with the thesis there. And we match that all up with then consumer sentiment from the videos I put out all the way through to the introductory calls we have. And based on that, we have a very good idea of what's happening in the market now and what's about to happen in the next 6 to 12 months. And so far, in all of our findings, we definitely don't see a sizable crash in the next 12 months. Now, you may be thinking, why would this buyer's agent, who's clearly biased, tell us the market's not going to crash because he's obviously promoting people to go and buy property? And you might be right, but the reality is I'd rather be historically correct than to just pump my business for the next 6 months and then lose all credibility altogether. That's why I bring out more video content than anyone else in the space, because I just want to help as many people get the right information. Because right now there is far too much crap out there when it comes to buy this off the plan apartment, it's the next best thing. Go buy a house and land package, it's the next best thing. No, screw that. You need to just look at numbers. You need to get people to execute and do it at speed. It's as simple as that. If you can go out there and make 5 calls, it's going to be better to make 50 calls. And if you have never spoken to an agent versus someone who's spoken to an agent and bought a couple of properties over the last 12 months, it is a clear winner as to who's going to get the better deal. And that's what I urge you to think about, is block out the white noise and focus on your strategy and acquire assets. The whole idea with real estate is that you want to be in the game for as long as possible. And you know when people get out is when they panic sell. They buy and sell with emotions. And that is the perfect thing you want in a real estate market. So the way that I'm personally looking at this is a real estate correction or a crash is actually really, really healthy. It happens across all markets and it's happened for the longest period and it will continue to happen. It will never just go straight up in a line. There will always be corrections. And what happens is you shake out the foundations. You see who's going to hold for as long as possible. Anyone that can't hold will miss out on the gains that come for the next 8 to 10 years. So if you're buying something today and you think, well, if the market crashes by 20%, I'm going to go bankrupt, I can't hold this property, I've lost money, then you're probably not going to have the right mindset on the way up and you don't deserve to be part of the growth that comes with it. Think about this. When there was so much fear in 2019 and 2020 about prices to go lower, those people who bought during that time would have been known as the perfect investors. They perfectly timed it. And as a reward to them, they got exponential gain. There's certain markets right now where the momentum is really strong. So prices have continued to go much higher very quickly. Then there's other areas that are stagnating. They're not going up, and there's some areas that are actually still going down. You need to be careful about what you buy and what asset type you're actually buying as well. Now, I spoke to someone yesterday and they told me that, Ravi, it's actually less risk for me if I buy something off the plan or a house and land package because I only have to put a 5 or 10% deposit now, and then the rest I can pay in 18 to 24 months. And I said, okay, sounds interesting. So you believe that the risk is greater because you get to buy something established with data and that it exists with long-term trends. That is more risky because you have to put up a 10% deposit and take on a loan versus going out there and saying, I just need to put a 5% deposit down and hope that it gets built in 18 to 24 months. And I repeated that and the person said, yeah, you make a good point. But the reality is they still needed to weigh up whether one decision was better than the other. Now, this is a really good point for you guys. It's to understand that if you're not in that situation, you can see clearly, logically, what the better decision is. Because there's no guarantee in 18 to 24 months, it's actually going to get built. Secondly, you have no idea where interest rates will be in 18 months. You also don't have any idea if the market crashes at that point. And the most important is that the bank could go and consider market conditions, which they do as part of their valuations. And they could say, well, market conditions are suggesting that the market's overcooked. So we think the market's going to crash, which means now we're going to be conservative with our valuations, which then in fact means if you don't have the extra funds to fund it at settlement, you're going to lose your deposit anyway. So what I would want to be doing is buying established stuff now. I can control the narrative, and the way that I would go about doing it is what changes. So how would I go about doing it if I was buying real estate today? I'm still buying real estate today, and the way that I do it is exactly the same way I've been doing it till this point, which is I'm going out there and I can get the maximum LVR position that I can, which I know is scary for a lot of people. Why would I go and do that? The market's about to get cooked. Well, I'm just giving you my opinion. This is what I'm doing. And I'm saying that based on all of our data, the next 12 months suggests it's clear sales. In fact, it's suggesting to us, in line with the 18.6 year cycle, that we may be entering the winner's curse, which usually could go for about 2 years. And what we will see during this time is we will see prices so much higher. And yes, people suggest that we've already seen the winner's curse start in areas like Perth. I would go on to say that, yeah, maybe that's true, but there's no guarantee it ends in 2 years. So instead, right now, I would be investing in real estate just like I was, but being extra aggressive purely because I know the banks are starting to cut rates. The RBA knows that their next move is most likely a rate cut. Now, it's not a matter of if, it's a matter of when. Now I know inflation might be a problem now, but it may not be in 6 months. And I would go on to say, you need to look and pay attention to the trend of inflation. Look at the rate of growth of inflation and how it's been declining over time. That is where your answers will lie. And the way that you know that this is correct is because you just need to look at the flipped situation when it came to disinflation, which led the interest rates to be cut initially, then increased over time, but it made no effect. So if you're thinking about interest rate cuts and there's going to be 50 basis points or 100 basis points, most likely won't make a major effect on the economy, but will definitely allow a lot more people that are sidelined to come into the market because now their borrowing capacity has just increased. And if they're looking to buy a home, you better believe that's their chance to get in. And that's what's going to happen in the next 6 to 12 months. So how is that going to change my thesis from now and investing in 12 months time? Well, in 12 months time, we'll obviously look at the data and we'll be ahead of the curve. And at that point, what I might do is say, instead of purchasing 2 properties and maxing out having no emergency fund, I would go on to purchase 1 investment property. I would start preparing and having the mindset that if we did see prices fall by 10%, I'll be able to purchase another property. If it falls by 15 to 20%, I can purchase 2 more properties. And this will all be dependent on the fact that you have a job, you have an income, and you have the cash or equity to be able to execute. Most importantly, you better have the mindset to be able to do it. Because there are scavengers out there that sit there waiting for an opportunity, but have the investing muscles all built up. It's like when you see bodybuilders walk into a gym and you're like, bro, you won. Why are you still here? That's the mindset of a killer. And I can tell you now, there are people out there that are investing right now, will be able to adapt, and then when things aren't looking so great, they'll go in and they'll buy as much as they can. And they'll have the mindset plus the cash and equity, which is going to be far greater than the average people to be able to go out there and scoop up what they want. I believe we will have a correction in the next 3 to 5 years, but I don't think that should stop you from investing into real estate and building your machine. There is a way that you can do this that's sustainable, and if you have the right strategy and the guidance, you'll be able to know when to leverage up to your nose and when it's time to slow down, consolidate your position, and start prepping for taking care of the opportunities that come with it. There's a saying that you should never let a great crash go to waste. It's always an opportunity to get some more. And it's the same thing we apply for when it comes to the stock market and cryptocurrency, although at this point, most people are completely burnt by that. But better believe me, in 2025, there's going to be so much content about crypto and it's going to be all over mainstream media. I'm starting to structure up my portfolio to prepare for the next 3 to 5 years, and I have more of an incentive to think about this because I have a business that operates in the real estate space. So I have to think about it not just for my own portfolio, then I have to think about it conservatively for how I maintain a headcount of 40 plus staff at that point that are employed full time at Search Property. And not only that, but then be able to grow during those periods of time. I am so confident, having seen consumer behavior, studied it for years and years, to know how most people react in situations. I've just seen that thesis play out when it came to the pandemic, and I believe we're going to see it play out again. In the next couple of years, we will see the next seismic shift when it comes to wealth generation and the wealth transfer, because the smart money will go in prep in the next 12 months, while the dumb money will go in there and say, I'm going to buy as much as I can. I don't care what price they're at. And they will end up buying the wrong stuff because they didn't have the right strategy. So here are the 3 key takeaways. Number 1, have a bulletproof strategy. If you don't have one, you will fail in the next 5 years. You could get lucky and buy a property now and it does okay, but if you don't have it planned out well for the next couple of years, you will fail. And I'm not just saying there's no good time to be buying. I think opportunities will present themselves and you need to put yourself in the best position to be able to actually execute on those. Number two, believe it or not, you need to have a team. If you're doing this by yourself, believe me, the pandemic shook me as well when it came to my emotions. That's why you need to have the right people around you to guide you. Think of it like this. I'm thinking about this logically and I say, I come up with this strategy when times are good. When I look at the same strategy when times aren't so great, the emotions will kick in. And I remember feeling this as well because I bought a lot of property in 2020 when most people weren't touching it. And I said, okay, I need to go back to my strategy. Had the right people around me and they guided me with their logic to say, Ravi, you signed up for this. You know exactly how this was going to play out. It's playing out. You just need to weather the storm, but trust the process. That's why if you're not someone who's seasoned at investing, has a large portfolio, you need to go and team up and outsource the entire thing. Because when times get crazy, which they're about to get, you're going to fall behind because once you make a move here, unfortunately a move here is getting made. And it's going to be so volatile that you'll end up probably walking away from the market altogether. And number three is stay cautiously optimistic. There is so much negativity out there when it comes to personal development, learning about things, understanding, investing into real estate, investing into assets, growing businesses. It's all negativity, but it's usually by people that have never done it before. So what I'm saying to you is figure out what your strategy looks like and be optimistically cautious. What you need to do is say, okay, I can go and buy 6 or 7 properties in the next 2 years, but is it the right time to buy? Okay, well, if I don't have the answers, I need to outsource that and get the expertise. And then if I am going out there and scaling up a portfolio, which I think a lot of people will be able to do a lot easier in the next couple of years, if they start now, they'll have the cash and equity to be able to execute. Because think about this, if you have the cash and equity as property markets go up by another 20% before we see a market correction, what happens if the market correction's 10%? Now that would be scary at that time, but if it's only 10%, and the market has grown by 20% leading into it, are you going to feel like you're further ahead or further behind? Now, if you haven't worked on your investing muscles, you haven't got that property that went up by 20% and you took out equity just to sit there in case a situation occurs, you're not going to have that available to you. So who do you think is going to be able to move faster? The person that's active in the market, has a team around them, or yourself that has to navigate your own emotions, your partner's emotions, and all your mates that are telling you that, hey, I knew Ravi was going to be wrong, screw him. Now we can go and comment on his videos, say that he was wrong. And the final point I'll make is you can go back and ask any person that bought at the hype of 2008, 2009, at the hype of 2016, 2017, before we saw the market crashes and corrections here in Australia. And they will go on to tell you in 2024 that I wish I bought more. And that is despite the fact that they bought at the top, the market's corrected and there was so much volatility. Right now they would be up by at least 50 to 100% more than what they paid for back then. This next correction, whenever it comes, will be exactly the same. Yes, you can go on to argue that the dynamics will be different, but the markets often rhyme. I hope you guys have taken some valuable insights from this video. If you want to move at speed and get into the market before the craziness starts, I'm going to leave the link in the description below where you can book a call with our team to get structured properly, get the portfolio right, get the lending and the structures right, so you can start making those moves before everyone else comes into this market. And again, you need to have a plan, a structure, and a process. And that's the stuff that we help people with because we like to help people scale up their portfolio to make meaningful differences to their own lives. So if you want that help, reach out to us. I'll also leave our email as well in case you have a bit of a story and you want to share it with us, then I'll definitely be interested to listen. I hope you guys have enjoyed this one. I'll catch you guys in the next one. Thanks, guys.